We are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis, and we are marking up AVGO. We are in the monthly time frame. Price action last candle to right hand side is a bearish red candle. We do have price action overall, higher highs. Price action overall, lower lows, followed up with the midpoint line. Also adding second level highs. And we are adding third level highs. So let's zoom in price. So we can see price actions between the overall higher of the market and the midpoint. Between that area, consolidating like a pattern's forming. Price action is currently a bearish red doji cross pushed down to the bottom, so it's retesting the second, the third, and fourth to last candle in that market. It could be pushing up further, headed to the midpoint or out the midpoint of that area. Current price is sitting at 544.72, so if price work its way up, you can head to that resistance line at 580.94. Before reaching that line, it can tag the midpoint of the resistance line we just talked about and the current price, tagging that number at 561.37. If price decides to reverse or come back down for another retest, price action can tag the midpoint of price action and that support line of 522.00 before making it down to second level highs at 495.46. So if price decides to work its way up further, price is identifying multiple things. So we have an area of support. Market did break the midpoint. It did retest, pushed up to a next level. So when that market did that, it reached up to a high, lost momentum, came back down to second level highs, and is consolidating. And we can see that market is trying to work its way back up to at least the third level highs. If we doesn't reach that area and break up and break out, market's coming down. But that formation is trying to form right below price. We do have that decline W coming down in red. We have that first, second, third, fourth double bottom price action retest. The previous second, third, fourth to last candles in the market, and market could be respecting with a follow up with a bullish green candle and creating a pattern of a double bottom and a retest, or maybe it may look like a head and shoulders pattern. The price decides to work its way down, so we do know that price action reached the overall higher highs of that structure. So we can see that market drop back down to that second level low, which created that first, second, third, fourth retest, and the market pushed down again. So let's try it again. First, second, third, fourth. Hold on. First, second, third, fourth. Retest 1, retest 2. Now it's retesting again, and we're going to see if it's going to push down for that third time. If so, we're looking at the break of that market here, looking for another retest for that market to make it down to our black SR line. So we can see areas of second, third, fourth to last candle, respecting the area of support, or that it can consolidate between those red SR lines or within the second to last candle in the market until we see that breakout. Walking down to the weekly time frame. So weekly time frame price action, bullish green doji. So it's retesting, indecisive. So there's a few things going on. So first off, market does push up further on this weekly time frame. There's patterns inside patterns. We have an overall decline W, first, second, third, fourth. So we do have that break of that market. So market made it to the midpoint of that SR line. So it's either can come back down and retest to push back up. Or we may see the break and retest on that line we just created at current price for the market to follow up with the bullish green candle. And as we walk down the time frame, you probably can follow up with a retest and market pushes up if it does happen. But so far it's reading as a retest. Price, second, third, all within each other. So we having that consolidation with a bit of incline. So if we connect, there's a patterns inside patterns. So remember, we have that overall, which we found that W, break and retest, And also below price, there's also another pattern of that coming down in red, first, second, third, fourth, retest, market pushed up. So we have a double bottom and a retest, or a head and shoulders pattern, or triple bottom in that area, and the market pushed up. And also within this area near price, second, third, fourth, we have, if we connect these resistance, let's grab our trend line. So if we connect the resistance on the way up, and we connect our support going across with the price, second, third spiking at bottom, at least price is second spiking the bottom, price action, third last candle broke through. So we can see that market is in that wedge pattern as it is bouncing up and down until we receive that breakout to the top side or to the bottom side. So let's take a look at what's going on a daily time frame. On the daily, price action is reading as a bearish red doji, spike down to the bottom, so it's retesting. Market's getting very gap, a lot of gaps in the market. So we can see that market did tag that resistance for a solid double top with the first, second, third. If it doesn't break, market's coming down. If it's respected, we'll see that market is respecting these multiple patterns, which identify as the break and retest, which we do have that first, second, third, fourth retest. Market pushed up once. If we receive that break of this previous area, we are looking for a retest for that market to push up. So if that market pushes up after this area, market's coming from a double bottom and a retest, or a 3 pushes to that bottom, which would give us a triple bottom. Headed down to the 4-hour time frame. So now being on the 4, we know that price action is coming from a zone, so it's sitting in the midpoint because we do have a resistance line. Price is near that midpoint line, and we have an area of support. So let's draw that out now. Once again, let's create resistance. Let's draw our line for that midpoint. It's going to be a little off, but we get the concept as we walk down the time frame. Midpoint, and we have the support that's already created. So with the major support line in black, we're going to put a zone around that area, and we can see what happened, how market price has went into that zone, identified the break into that zone, retest, top of that zone again, came to the midpoint of the zone, finally broke out, came back into the zone, pushed up to that midpoint. Now we're waiting to see what's happening. Is it going to push up further to break out the previous side, or is it coming back down for a retest to the top of that zone or within that zone? Walking down to 3-hour time frame, price action, 3-hour time frame reading as a bearish red candle. Price second, third, last candle is all consolidations, a pattern that's forming at that area. So let's see if I can draw it out. So if we connect it, it'll look like the resistance coming down, and you connect the third last candle wick with the second last candle wick. So market's in some type of wedge pattern. It's not going to be perfect, but you'll see it as we walking down. So we have like a diamond wedge pattern towards the right hand side horizontally, and also we can see if that market was respected with the price action third last candle. Market's in that area bouncing up down. So as we walk down the time frame, we're going to see what's going on. Headed down to the 2, price action, bearish red candle. So we can see market spiked up in that area but still work its way down. But overall reading as that overall first, second, third, fourth retest of that line we just created to see if that market's going to push up. So that's a wedge pattern that's in that area. It's a flag pattern as we can see. So let me see if I can draw it out a little better. So if you think about having that pole, we have the flag, and we can see that market created that W. So break, retest, and see if it pushes out that flag pattern. Headed down to the 1-hour time frame, all within each other. So we're receiving that consolidation, bearish red candle, same as a 45-minute time frame, all within each other. You want to see an engulfment of that previous price, second, third, fourth, fifth, sixth, seventh, eighth, ninth candle in the market. You want to see it engulf that candle to the top side or bottom side, same as a 30-minute time frame, same as a 15 price action bearish red candle. So 5-minute time frame, price in second, long wicks up to the top, long wicks to the bottom. That's just a huge doji. We'll see if we'll see that on a 3-minute time frame. We'll identify later on, but it is identifying dojis with the second last candle, third last candle, fourth last candle within one another, same as a 1. Okay guys, AVGO.